We will tell you the 10 goals you need to achieve before your 50s. This will help you in achieving a happy retirement, and it may happen that you become rich while attaining these goals even earlier. Watch this video till the end because this one video could change your life forever. Now let's start. Number 1. Managing your debt or completely paying it off. Perhaps it's a sign of growing wisdom, or perhaps it's the realization of the burden that debt can place on your retirement, but you have successfully managed to pay off or effectively manage your financial obligations. It is important to carefully consider your financial situation before taking on any new debt. It's important to prioritize paying off your credit card balances before any interest is added. It is commonly recommended that you allocate not exceeding 28% of your pre-tax household income towards home debt, which includes principal, interest, taxes, and insurance. It is recommended that you allocate no more than 36% of your earnings before taxes towards your total debt, which includes your mortgage, credit card debt, and auto loans. Number 2. Gradually increasing planning for retirement savings. Now that you have a goal, it's important to gradually increase the percentage of each paycheck that you save for retirement. Make the increments so minuscule that they go virtually unnoticed. If you're currently allocating 12% to savings, consider increasing it to 13% or even 13.5%. After 6 months, gradually increase your savings and continue doing so until you reach your desired goal. Similarly, if you're saving 6%, gradually increase it to 7% and then continue moving forward. Experts suggest that it is advisable to save around 15% to 20% or even more of your pre-tax salary. Streamline the deductions, ensuring the money is seamlessly handled. Receiving a bonus? Allocate a significant portion of your funds towards retirement savings. Even during challenging times, it is important to save enough to take full advantage of your employer's maximum matching contribution. Subscribe to our channel and also press the like button if you want to know more amazing tips to get rich. Number 3. Maintaining Social Security heading towards the maximum goal. It is understandable to have concerns about the future of Social Security, as there is a possibility of reduced payouts or adjustments to eligibility ages. However, Social Security is not going bankrupt. It is important to consider that it may be a significant source of income during your retirement, and there are steps you can take at present to optimize your payout. Visit socialsecurity.gov and create a My Social Security account. Utilize it to project your potential benefits at different retirement ages. If you're looking to maximize your Social Security benefits, it might be worth considering extending your working years to enhance your earnings history. Number 4. Make sure to regularly update your will. Having a will is not necessary. Without proper planning, the fate of your assets will be determined by a probate court. If you desire to have authority over the fate of your finances and assets, however, you will require professional assistance. It is important for you and your spouse to each have a separate will. A will ensures that your decisions and requests are honored even after you pass away. Consider utilizing it to express your desires for the well-being of your children and pets once you have passed away. Utilize it to assess the fate of belongings that hold both financial and emotional significance. If you wish, you have the option to designate an executor who will be responsible for carrying out your instructions, including any arrangements for any other things. Number 5. Managing your expenses and keeping it in check. As your circumstances change and your children become more independent, you might find yourself with extra funds at your disposal. It can be tempting to indulge in some spending. After all, your friends may be enjoying their lives, and you've put in a lot of effort to reach this point. Enjoy yourself, However, it is important not to underestimate the importance of retirement goals. In your 50s, if you have a stable job, you have the opportunity to make the most out of your earning potential. It's important to prioritize savings, especially considering the potential length of retirement. Additionally, it would be wise to consider adjusting your spending habits once you retire. Number 6. Establishing clear retirement objectives. It's important to establish a clear objective for your retirement savings. Go ahead and take action. If college is important to them, the kids will figure out a way to cover the costs. They have ample time to establish a solid financial foundation. I'm sorry, but that's not the case. It is important to establish a retirement income goal early on to allow for ample time to make any necessary financial adjustments. There are a few different ways to approach this. It is recommended to aim for saving between 6 and 9 times your annual earnings as a household by your mid-50s to early 60s. Similar to a financial advisor, but without explicitly mentioning the term. I can assist you with your financial needs. Just comment below your problem. By the time you reach 60, your IRA, 401k, or other account should ideally be around $360,000 to $540,000 if you earn $60,000 annually. Another option is to assess the extent to which your existing retirement savings will support you. According to the KeyBank calculator, a nest egg of $1 million will last for a duration of 21 years if you withdraw $50,000 annually. This calculation takes into account a 2.5% inflation rate and assumes that investments earn a 3% return after tax and inflation. Is your savings only at $100,000? It will provide you with enough funds to cover your expenses for a period of 2 years during your retirement. Number 7. Contributing to the community. Embracing a sense of responsibility and making a positive impact on the world is a crucial aspect of personal growth. Just like a financial advisor, philanthropy enables you to showcase your values and forge new connections with the world, regardless of the size of your budget. Not only is there personal satisfaction, but there's also the added benefit of a helpful tax deduction. Number 8. Developing a long-term care strategy. As we reach our 50th birthday, it dawns on many of us that perhaps, just perhaps, we will indeed grow old. Given the likelihood of requiring skilled nursing care in old age, even if only temporarily, it is crucial to carefully consider the financial aspect of managing your expenses. Long-term care insurance is a valuable asset. However, determining if it's suitable for you relies on various factors. Number 9. Paying off your mortgage. Entering retirement with a mortgage that is fully paid off is a wise objective. It used to be quite common for people to pay off their mortgages before retiring. Not everyone can successfully navigate the current landscape, but the potential rewards are significant. You will need a lower income. If a significant portion of your monthly income is being consumed by your mortgage, you will experience a substantial increase in disposable income precisely when your paycheck ceases. Additionally, it's a raise that is not subject to taxes. Number 10. Assessing and making necessary changes to the insurance coverage as needed. Life is full of unexpected twists and turns, and it's important to ensure that your insurance coverage keeps up with these changes. Ensure that your loved ones are financially secure in the event of your passing by obtaining sufficient life insurance coverage. Consider opting for more affordable term insurance. Instead of life insurance products, low-fee index funds can be a cost-effective option for saving for retirement. Similarly, if the loss of your salary would have severe financial consequences, it is important to protect yourself with disability insurance. As your children embark on their careers and you and your spouse approach retirement, it may be possible to consider discontinuing life insurance. Consider reviewing your home and auto insurance limits as well. Is the coverage still suitable? Consider consulting with an insurance broker to assess your health insurance requirements and expenses. This service is typically free of charge. Make sure to calculate your out-of-pocket expenses from the past year if you have a high-deductible plan to ensure that you're still in a favorable position. Now, to know more amazing financial tips, just subscribe to our channel and also watch the video appearing on the right side. In that video, we have discussed what are the things you should avoid if you really want to get rich. You must watch the video